Hello and welcome to Business Television India. I am Muralidhar Swaminathan. We have a special guest with us, Mr. P.S. Jayakumar. He is the Managing Director and CEO of Bank of Baroda. Mr. Jayakumar, welcome to the show.
Thank you very much. Thank you, absolutely. Thank you. Delighted to be here.
The first question. These are challenging times for the banking sector. You have so many issues coming up. There is the NPA issue, growth issue, recapitalization and the works. How will you steer Bank of Baroda out of this?
I think we're making very good progress overall, I would think, if you go by the last quarter results. Our way of looking, the way we're looking at it is to say that we have got to transform the institution. Short term, we have such issues, specific issues that come and go. But fundamentally for the bank, it has to be future ready. So we launched this transformation initiative that covers a variety of areas. Improving our product and processes, making our bank more digital. It's about people empowerment, strengthening the compliance structure. And so as these things get rolled out, as has been, the effect will be very visible. In fact, the results are already starting to show. And so through that process, we want this bank to be substantially strong and compete at the top quartile of the peer group, of the total market, of the total banking financial institution market. So that's how I look at it. We are fundamentally very strong from a capital adequacy ratio. True, we have a large NPA issue, but we also have one of the highest coverage ratio. And our growth numbers have been promising the last 2 quarters. So overall, I think we are moving in the right direction. And I'm very optimistic as we look forward for the next year.
Right. Okay. Let me move to the next question. The exposure under NCLT is roughly 50% of your total NPAs, if I'm not wrong. It comes to about 11,500 crores, and it should be about 50 to 60% if we take the total net NPAs 20,000 crores. How is the progress on the NCLT front?
See, first we have to be a little patient because in the NCLT procedures, there are neither analogies nor precedent. This is a new set of law that has been implemented. The positive thing is there is progress every day. Sure, in some of them there are some legal disputes, some questions before the court, but give or take a quarter, these issues would reach a natural conclusion.
Right.
But the important thing is that we are staying to the time frame. Structurally the way it's envisaged is working, and there will be intervention till some court orders come in, judgments are given, and precedents get set. And so that shouldn't really make us feel worried. It's making good progress. Now, obviously, the outcome is dependent upon the quality of the company, which is subjected to NCLT. And if the quality of the company is not particularly good, as is the case in a number of instances, then the recoveries are going to reflect that reality.
Right. Now, we were talking to SBI. SBI is the largest and the lead lender in many cases, and they are confident that 2019 can be a kind of a turnaround year for PSU banks, as most of the NPAs would have peaked and the NCLT resolution would have happened. What's your take? Do you think that for Bank of Baroda, in most cases, you would have seen NCLT resolution happening?
So there are 2 ways of looking at it. One way is to look at how do we continuously increase the operating profit, the earnings before we take for provisions. And if that number grows up, then there is organic capital that is thrown around to deal with whatever provision numbers we need to take. After all, as far as the credit book is concerned, we're sitting with an embedded risk.
Right.
And there's not a whole deal we could probably change on them. We could be more efficient in collections, some NCLT procedures could go along, but we are sitting with an embedded position. So our approach is to continue to focus on growth and continue to increase the operating profit, giving us adequate organic capital to deal with any kind of issues as well as provide room for growth. Now, if I were to look at the last quarter, for example, on a consolidated basis, we probably around 4,000 crores of operating profit. And that was up, I think, by about 30% or 35% from the prior period.
Right.
Now, if the loan growth book stays at 15%, and the operating, and it's largely a fixed cost structure, therefore a very high level of operating leverage, that throws up adequate amount of operating income. That, to my mind, is adequate and will be adequate to take care of all the problems we have.
Right.
So the actual point of inflection in our case is already beginning to happen. And I think at some point of time, the provision coverage would be adequate. Even today it is high, but I'm saying all the NPA numbers will roll out. All the hidden NPAs will also roll out.
Yeah.
And so we should see a good year ahead. So as long as we do the right things in terms of building the right structure, and not look at ourselves as dealing with crisis, but rather dealing with a transformation agenda to make the bank strong,
right,
then automatically the rest of the outcome will flow itself out. So I'm not very specifically focused at NPA. I'm more focused around, we're all more focused in a bank around getting ourselves to good growth, fixing our systems, whatever is missing, getting analytics, centers of excellences, growth, and then generate enough organic profit, and that's really what we need to do.
Right. Yeah, I think that's a very important move. Let NPAs and the risk management be part of this overall strategy. Is what you're saying. To come down to specific cases, at the NCLT, are you happy with the process and the progress? Let's say specifically, if you want to name some of the cases where your bank has got exposure. There is this conflict that has come up. It's partly thrown in by the ex-promoters in the Binani cement case. They went and struck a deal with Ultratech, and they said, look, we are going to maximize value, and they went back to NCLT. NCLT said that, look, if you want to do out-of-court settlement, you guys talk to the committee of creditors. Now, this is a very peculiar situation. You have legal process versus maximizing lenders' value for the lenders and shareholders. How do you navigate this kind of a situation?
So the way, at the end of it, it's a collective decision of the COC. Although we've been leading the exercise in terms of filing the NCLT, just to give you overall perspective, a 4 to 5% market share of the total credit exposure. So by ourselves, we don't move the needle anywhere. Okay. So yes, the court has given some direction, but we still don't have a written order of the court. Probably we should get it today. And then the COC would come down, meet, and then discuss. Now, regardless of whatever the outcome is, and we have to be fair in whatever process we do, for the lenders and for the other creditors, it's by and large a good story that they're going to get bulk of the amount back. In the case of banks and secured creditors, all of it. The other offer is higher, then therefore it would further improve the situation. But regardless of what it is, this is a legal matter that needs to be considered and brought to bed. And so I see, let's say we get into some kind of more, if it takes more time, probably a quarter, but by the end of it, it would come to an end. Perspective, we do not have any particular, we'd let the process take itself over.
Right.
And our objective is to make sure the process is run in a transparent and a fair manner.
Exactly, yeah.
So that the decision that comes out is in the best interest of everybody.
Right.
So that's really the way we look at it.
Yeah, I think that's a very important point you're making, because typically what happens, the bidder who was there in this case, Dalmia Bharat, he might come and say, look, I have followed all the process.
Sure.
Suddenly, someone else has stepped in, and he's saying I'll offer more. What happens to the legal process? This is the question that will come.
So therefore, all these things will be decided by the court. Now, if any aggrieved party, they have a right to go to the High Court or the Supreme Court. So that's how it will take, and we have to be a little patient, give it a quarter. But the good thing is, it'll set the decision, would set the precedent, it'll set the law to deal with similar such kinds of if such kind of issues come up, or such kind of in similar kind of play, it plays itself in the same way. We have a legal precedent to go by.
Right. Are there any changes to the IBC law, do you think, will be required at this stage or as we go along?
Well, they've been discussing about some changes to the 29A, right. And I think those are interesting and should deal with some of the challenges for the smaller size company, and they're all prospective in nature. Right, that's how the government has put it. So I would put it to you this way: these will get fine-tuned with experience, and we should allow ourselves to be a little flexible in terms of fine-tuning our law in relation to experiences.
Yeah, right. Yeah, I think flexibility is important. So while talking about flexibility, to what extent are you prepared to take haircut? Will you say, will you go case by case basis, or I'll say, look, my overall exposure to NCLT cases is about 11,500 crores, if I'm not wrong, in NCLT 1 and NCLT 2. Say that, okay, 11,500 crores, I don't mind taking a 50% haircut, let's go fast and clear this off.
So overall, our provision coverage today is around 68%.
Correct.
Adjusted for the TWOs, which is assuming nothing will be recovered, that number comes to about 61% or thereabout.
Right.
So we are adequately provided. If you go back into the last 3 quarters, you would find that every quarter we have taken provisions to the extent of the operating profit, and thereby continuing to give us a headroom to deal with these issues. Now, on a particular transaction, we may not have the extent of the coverage, but collectively we are fine. And so what you're going to see with some of the steel sector is that the resolution is going to throw up some surpluses, and maybe there is shortfall somewhere else, and that will go to fund it. But on an overall average basis, I think our numbers are pretty good.
Right. Now let me shift focus to the more important question, which is been underlying, which is the underlying trend in the banking sector, especially PSU banks over the last 1.5 to 2 years. The PSU banks have moved away from lending to corporates for obvious reasons, and relying more on retail. In fact, even in your case, I think retail has led a lot of growth over the last 6 months to 9 months. But retail is quite competitive, isn't it? At some stage, you have to go back to corporate lending.
So let me put it this way. I don't think other segments are not necessarily important. The corporate segments, corporate market still has a very significant role in the growth of a balance sheet and growth of a revenue. And we continue to remain very focused on that sector. In fact, we have a much more comprehensive target market, and we've built a number of steps, including a centralized credit, sector-wise specialization, better metrics between relationship manager, clients, more cross-sell, more products for cross-sell, cash management, supply chain, etc. So that remains important. But we are very, very low market share with respect to the retail business. So some 3.5% of mortgages. So obviously we have to grow that. But when we did the exercise and looked at which is a channel that is contributing to our mortgage growth, only 18% came from new customers, 18 to 20%. The balance are all our customers. And they're taking loans with some of the banks, or they're going in for a fresh set of loans, and then we offer an easy product, transparent process, you get it. So for me, the ride on the growth, for us in Bank of Baroda, the ride on the growth is coming in from our existing customers who have prior history, and we have a lot of data on them around the credit experiences. So it's a very positive thing because it works to the plan of having more products per customer.
Okay, on that note, we'll take a very short break. Stay tuned, we'll come back in a minute. Welcome back. You're watching Business Television India. We are in conversation with Mr. Jayakumar of Bank of Baroda. Mr. Jayakumar, at the core of the NPA issue is the historical legacy loans that have been around for a long time. The effort to clean up is happening at all fronts, at the macro as well as at the micro level. But going forward, the present government's drive is once again infra and SME.
Right.
Okay. So the danger of getting back into NPA, in good times, we close our eyes and say that infra is great, SME is great, we start that buoyancy happens, But how do you manage this kind of a situation where you see growth coming back, but the growth is coming back from the same sectors where NPAs are potentially high?
So one of the things is that we are lagging in infrastructure by all counts. Therefore, infrastructure investment is necessary for all of us, including the road through which I came from to come to your office. So we shouldn't cringe about it. It has to be made.
Sure.
Obviously, it has to be funded. That also cannot be avoided. Some portion will come to the banks. That's also inevitable. But what is happening different today than what is happening before is a very structure by which the infrastructure financing has been done, has been improved. Take roads, for example. The land is being acquired. Approvals are being given. There is no real funding of a large amount. We're only providing guarantees for the mobilization advance. So when you look at it from that picture, the underlying credit risk is improved by the way the structuring has been done. If you look at the annuity project, technically we could make it bankruptcy remote because you could get already alternative servicer to take care of the maintenance.
Sure.
If you look at the metro projects, for example, the funding is already in place. Whatever be the source, multilateral, bilateral funding, or budgetary allocation. Right. So I think we are dealing with a situation where people are aware of the risks, and a number of steps have been taken to kind of deal with that. And also the lenders, and as well as the people or borrowers who are actually constructing, are also equally careful and equally concerned about this risk. So I think, I hope we don't repeat the same mistakes again, but I do think the situation today is vastly different than what it was before.
All right. Let me now come back to the burning issue. Frauds, nexus, nepotism, they are everywhere.
Yes.
Public sector, private sector, the largest private sector bank, is making headlines for wrong reasons now. Fraud prevention is a big issue. how do you manage? Have you? You'll certainly find that some fraud has come up. How do you manage the situation? How do you prevent?
Okay, let's go over this issue of fraud in a little bit of detail. First and foremost, I want to tell you, in banking, as in any of the businesses, some frauds are inevitable. So you're not going to be in a zero position. The only thing we have to make sure is that those damages are minimal and we take immediate actions and recover as best as we can. But the way we have looked at it in Bank of Baroda is to look at our operational risk. And what it gave us as a first sight is that there is not adequate segregation of work or responsibilities at the branch. And it is possible for one person to take the transaction all the way through.
Right.
Now, this is to be addressed in a very structural, architectural sense. So what we did was to create an equivalent of a BPO in a gift city in Ahmedabad, where we have a lot of, which is logical because of our origin, and then segregated to a central process. For example, all our trade transactions, export, import, remittances are handled centrally out of gift city. And it's all, requests are all sent through digital process to those centers. They don't know which one of the 100 agents are going to pick up a particular transaction and process it. So collusion is almost impossible. And also there is a consistency in the approach with respect to underwriting, review processes, etc. And we're building all the disciplines, typical BPO process have happened, cycle time, re-engineering, etc., etc. So that's one way of dealing with the issue. The second set of issue that deals with fraud broadly is diversion of funds.
Right.
Money has been diverted. So now the process is around the three drivers, which is how do we improve the quality of due diligence and underwriting? That's step one. Step two is how do we ensure security creation is perfect or appropriate? And the third issue is how do we have a monitoring system that early warnings can be picked up. And so as we invest in all these three things, the likelihood of fraud therefore reduces or recedes.
Right.
So previously we would have, for example, a list of lawyers with whom clients could go and take legal opinion.
Right.
Today these are all randomly allocated through a central process, as an example. And the reason is it avoids any potential issue of fraud. Not that that earlier process by itself made us vulnerable significantly to fraud, but it's all about building controls and processes.
Correct.
Now, coming down to the MSME segment that you mentioned from a risk perspective, I think the important change are two things in my mind. The first is the GST itself. It's going to provide us with data, adequate data, to establish a sale exists or a purchase exists.
Exactly.
And by looking at the GST data, the bank statement,
right,
and the stock statement of the stock and data statement of the customers, we're able to triangulate information and establish consistency. And so today we're building systems that can speak host to host to these companies, right? Use the data and then kind of prove itself out.
Right.
Now, that's not fully ready as yet, right? But if you had to take a 9 months kind of a view or a 12 months kind of a view, that would happen. So that's one part of the point. The second part of the system is systems like trades, for example. We are a large believer in trades. We have probably 18 to 20% market share across the three trade platforms. The volumes are not very significant, but they are growing month after month. And that what it does is it ensures a certain degree of compliance on the part of larger organization to pay their MSME on time, and it provides a larger platform for MSME to discover the pricing.
Correct.
So I think as long as we continue to invest in mechanisms whereby the loans become tradable, there can be more participant in the market. There are different ways in which risks can be diffused. You deal with the issue of MSME. And the last element is, so far we've always been thinking about capital adequacy ratio from the context of increasing capital.
Right.
But there is also another way of optimizing it, which is through better defense measures. For example, credit enhancement as a market in my view could develop well.
Okay.
So when we talk to, for example, all those people who want to buy distressed assets, I tell them, instead of looking at distressed assets, why don't you look at performing assets?
Performing assets.
And then why don't you provide for me a risk defense model, some kind of credit enhancement? Let's accept that. So I think there are different ways of dealing with the risk. There is no one way that we should only underwrite well, but we can also look for, and we always need capital to grow. There are different ways of dealing with it. So the more tradable loans become, more transparent, and systems develop, more instrumentalities come to hedge the risk, then you can manage growth much more comfortably.
Absolutely. I think that's a very important insight you've given us about using GST to control risk. It's a blessing in disguise for.
It's a perfect thing, which is why we've been discussing about a data-rich country. I think that's Nandan Nilekani's favorite phrase, but it's true.
Right. So technology can, to a great extent, minimize risk, especially the risk of the nature which comes from diversion. I think that's a bigger threat than
The other
anything else.
thing is about training and investment in people. That's also very important.
Right. Okay, so let me move to a couple of macro issues. I should pick up your thoughts on them. Reforms and recapitalization. That's the mantra of the finance ministry. Recapitalization has happened because of the need and the urgency of doing it, but reforms are not progressing to a great extent. What kind of reforms, or 2, 3 important key reforms for public sector banks that you think are required?
Actually, the term reform is so broad-based
Yeah.
and can be interpreted in many manners. So let me talk about the positive sides, and then let's talk about what needs to be improved. If you look at the reform process, the month end, and then the set of 6 areas on which the concentration and efforts of the bank is to be built, and as they get rolled out, as they are, then you're looking for a substantially improved public sector system, banking system, from a perspective of the customer.
Right.
Better services, lower documentation, quicker turnaround, and also from an institutional perspective in terms of investment in stress asset management, etc. So that process probably has a time to execute, right? Vary from institution to institution. Some of us, like for example, Bank of Baroda, have been in this process now for 18 to 24 months, and so we are ahead of the curve, and we probably will come to the end quite early. So that's one part of the reform process. The second part of the reform process is trying to make sure the boards of the management provide adequate strength to the CEO. Right. And that probably is an area on which effort is underway, and more probably will get done.
Right.
So I wouldn't get very pessimistic about it, nor would I say reform is equal to consolidation and merger.
Yeah, that's an important
So
point.
It's not that. I think the reform process is rightly focused on the micro issues of making banks effective by making changes in the process such that they serve the customer well and they handle the risk better. And to the extent these processes are missing in any particular institution, and to the extent these get fixed and they get into the muscle memory of the firm, they will all do very well. So actually the reform process is underway in many ways. It's not visible probably, but the work is underway.
Right.
And these are all very detailed kind of stuff, which doesn't really excite a lot of press. If I were to say, no, reducing cycle time for auto loan from 4 days to 2 days, it's no news item for you.
Absolutely. Yeah.
But that's what it is. Actually, it's from 4 days to 10 minutes. That's really what we're trying to do.
Yeah.
So I think those are all good developments. So I would say the reform process is underway, and if there are obviously many areas on which improvement is required, but they're all in the process of implementation.
Right. That takes me to one key question which has been always there, when it comes to public sector: dual control. This is an issue. It's not new, but it keeps coming up, and this has come up once again.
Dual control as in?
Dual control as in the finance ministry and the RBI. So this debate has always been there. RBI sometimes says that, look, I don't have enough powers to control and regulate and supervise public sector banks. What are your thoughts on that one?
I would take a different tack on this. In a sense,
I'm asking you this question because you're from both sides.
Yes, I come from outside.
Yeah.
I have as yet to find a reason why I've not been able to make a decision.
Okay.
Indeed, I would say there is a fair amount of freedom.
Okay.
To make decisions. Nothing has constrained me. Of course, you have a board, you got to go and take approvals.
Sure.
And that's necessary. Some level of control, environment, engagement is necessary. So to believe we are not empowered to make decision is not borne by my experience.
Right.
Has there been any request to meet any particular client's needs? So far, I haven't received anything. So I don't believe there is interference as well. As far as the issue of regulatory environment is concerned, the Reserve Bank of India, the Government of India, I would leave it for better people to make decisions on this subject. Correct?
Sure.
And there is enough for us to do in terms of improving ourselves so that we stay away from all this macro discussion, but put our head onto the ground and do our everyday job well. That really is my approach. This is really the firm's approach.
Absolutely.
That's really what the board wants to do. Not get distracted by these debates. They're all there. But we have to do what we have to do, which is we know where we have to catch up. Just keep focus and keep doing that.
Right. Keep your focus and keep doing that. One last question. 2 days to go for the policy outcome. What's your take? Do you think RBI will pause and, let's say, wait and watch mode will continue?
That's a conventional view at this point. There's a consensus view. Consensus view. And I would tend to agree with that approach. But I must quickly add, I'm not an economist, and it's not a matter on which I have any great expertise. But looking at the data on the whole, I would think policy levels are going to probably going to stay there. But more than the policy, the communication that follows that, in terms of the expectations, hawkish, dovish, all that would also matter.
Right.
The other aspect I think we need to think about is the rate of growth in deposit versus rate of growth in loan. And to the extent the rate of growth in loan outstrips the rate of growth in deposits, the MCLRs must trend upwards. Correct? So that is another thing that may or may not synchronize with the movement in the government security.
Correct.
But unless we are able to substantially grow the deposit. But again, the good thing is that there is again a build back in the deposits for the bank in relation to mutual funds.
Mutual funds, yeah.
So I would think that should play a role.
All right. So thank you so much for joining us and giving us your insights.
For inviting me.
Fantastic.
Thank you.
Thanks for watching this special edition. In this conversation, we just heard the Bank of Baroda's MD and CEO. He's quite confident that there will be turnaround and that the bank is on the right path for a stronger future growth. Thanks for watching.